Welcome back to the channel. Many of you are familiar with Stellar's XLM and Ripple's XRP, two prominent names in the digital asset space, often discussed for their roles in payments and their shared history. It's quite common, for the conversation to quickly gravitate towards their transaction speed and low fees. And while those are, of course, important attributes, the truly distinguishing power, the first part of the secret, if you will, lies significantly deeper. It's embedded within their foundational design philosophies and their intended, often subtly, yet profoundly different, roles in the continually evolving global financial landscape. It's these underpinnings that the most astute investors tend to focus on. Let's first turn our attention to Stellar XLM. Its power, I believe, extends considerably beyond the simple narrative of being just another efficient payment rail. If you examine its architecture with a discerning eye, Stellar was meticulously engineered from its very inception with a profound emphasis on versatile asset issuance and fundamentally open access. This isn't an accidental feature. It's a core tenet. The Stellar Consensus Protocol, or SCP, is a fascinating piece of technology in itself, specifically designed to support a decentralized network model where, critically, anyone can participate. Anyone can issue new types of assets, be they stablecoins representing fiat currencies like USDC, tokenized real-world assets like commodities or bonds, community tokens, or even unique digital collectibles. Furthermore, anyone can build financial services on top of this open infrastructure. This design philosophy inherently cultivates what I would describe as a grassroots, bottom-up ecosystem. You see, the power here is in its democratic nature. For instance, a small fintech in a developing nation can tokenize local assets or create a remittance service with the same access to the network's core capabilities as a large corporation. This permissionless innovation is a powerful catalyst. And when we look at the recent advancements with Soraban, Stellar's smart contract platform, it's important to understand that this is not merely an afterthought or an add-on to chase a trend. Instead, Soraban is a natural, logical evolution of Stellar's core design. It dramatically expands the complexity and range of financial applications that can be built, empowering a truly diverse spectrum of services, from sophisticated DeFi protocols to intricate payment solutions, all while maintaining the network's inherent openness. This inherent flexibility, this deep-seated focus on enabling a multitude of asset types and services without central gatekeepers, is a facet of Stellar's power that often gets undersold, especially when it's simplistically compared to projects with more narrowly defined, top-down objectives. It's a long-term vision for a more accessible and equitable financial system. Now, let's consider XRP and the XRP ledger. While it, too, is recognized for its efficiency and speed, its design philosophy and, very notably, Ripple's strategic market focus have always been acutely and deliberately targeted towards a different segment, interbank settlement and serving the complex needs of existing, regulated financial institutions. This is a crucial distinction. The XRP Ledger Consensus Protocol, often referred to as RPCA, while also efficient, operates with a different set of priorities and trust assumptions geared towards providing an exceptionally reliable, scalable, and, in some ways, more controlled environment suitable for high-value institutional transactions. The ecosystem that Ripple, the company, has cultivated around the XRPL is very much aligned with this, providing enterprise-grade solutions, deep liquidity provisioning for specific corridors, and robust support for banks and payment providers. The secret to understanding XRP's unique power here, I believe, isn't just recognizing its potential to replace outdated correspondent banking systems, but rather its strategic aim to integrate with and intelligently upgrade the core of the existing global financial infrastructure. This approach inherently respects and is designed to work within the stringent regulatory and operational realities that define traditional finance. It's not about burning down the old house, but about providing advanced new plumbing and electrical systems for it. This targeted methodology, meticulously designed for a specific, high-value, and often risk-averse institutional niche, is a very deliberate and potent source of its unique power. It's about building bridges to the established financial world, rather than solely focusing on creating an entirely separate alternative. This understanding of pragmatic integration is key. So, when we peel back these initial layers, this 1% insight begins with a clear appreciation of these distinct foundational strengths. On one hand, you have Stellar's power, rooted in its vision for an open, versatile platform dedicated to broad asset issuance and a democratized DApp ecosystem. And on the other, you have XRP's power, derived from its deep, specialized focus on serving and upgrading the institutional financial world, particularly in cross-border settlements, driven by Ripple's enterprise strategy. Recognizing these fundamental, often philosophical, differences is the very first step to truly understanding the unique power each brings to the market, and why simply comparing their transaction speeds doesn't even begin to tell the whole story. Now, let's move to adoption. This is, of course, a critical area for any digital asset. Most investors, and indeed much of the crypto media, tend to track the headline partnerships, the big announcements from well-known entities. And those are certainly important. They provide visibility and can bring significant volume. However, the top 1% of crypto investors, those who often cultivate a more profound understanding of long-term value, tend to look deeper. They search for the undercurrents, the strategic niches, and the less hyped, yet often more deeply impactful instances of adoption that signal true, sustainable, or what I like to call sticky utility. This nuanced view is, I believe, the second layer of understanding their true power. Let's first consider Stellar XLM. While its partnerships with major players like MoneyGram for remittances or Circle for the widespread availability of USDC on its network are well documented and significant for mainstream accessibility, Stellar's power is also quietly, yet persistently, growing in areas that might not always grab the biggest headlines. I'm talking about the domain of real-world asset, RWA, tokenization, particularly by smaller, innovative entities, and the burgeoning, diverse Sorbonne DApp ecosystem. It's not always about the single, multi-billion-dollar institutional deal when assessing foundational strength. Sometimes, the collective power of hundreds or even thousands of smaller projects finding unique, specific utility on a network can build an incredibly resilient and versatile ecosystem. For Stellar, its inherent design for low-cost, efficient asset issuance makes it particularly attractive for these smaller innovators. Think, for example, of local community cooperatives tokenizing agricultural products for easier market access, or independent artists tokenizing future royalties, or even small to medium-sized enterprises creating tokenized invoices for more efficient financing. These individual use cases might seem modest, but cumulatively, they represent a significant expansion of financial inclusion and real-world application. Tracking the diversity and number of unique assets being issued and actively traded on the Stellar Decentralized Exchange, SDEX, beyond just major stablecoins, can be a very telling indicator of this grassroots RWA adoption. Similarly, with the Sorbonne smart contract platform gaining traction as of our current timeframe in mid-2025, the 1% insight isn't just about counting the total number of dApps deployed. It's about identifying those Sorbonne applications that are solving real, niche problems for specific communities or industries. Are we seeing microlending platforms emerge that cater to demographics previously excluded by traditional finance? Are there novel insurance protocols being built for specialized risks? Or perhaps educational platforms issuing verifiable credentials on Sorbonne? These might not be the DeFi protocols boasting billions in total value locked overnight, but they represent genuine problem-solving and network utilization. The true power here lies in Stellar's permissionless innovation and the long tail of use cases it enables, a diverse tapestry of applications, each adding to the network's overall utility and stickiness. It's this organic, needs-driven growth that sophisticated investors often look for as a sign of a healthy, evolving platform. Now, let's turn our attention to Ripple and XRP. Here, too, the secret to understanding its adoption power often lies beyond just the publicly announced number of banking partners. It's frequently found in the depth, the quality, and the tangible economic impact of those integrations, particularly with its on-demand liquidity ODL service, which, as we know, utilizes XRP for cross-border settlement. The top 1% of investors might not just be asking how many partners Ripple has, but rather, are there specific high-volume ODL corridors that are achieving significant, and crucially profitable and sustainable scale? These are the corridors that might not be featured in every crypto news outlet daily, but they are the ones demonstrating that the ODL model works effectively in real-world commercial conditions. Identifying these successful corridors, perhaps linking, for instance, remittance markets in Southeast Asia to the Middle East, or specific business-to-business payment routes in Latin America, and understanding the underlying transaction volumes and the value being moved provides a much more concrete measure of XRP's utility than a simple list of partner logos. It's about the economic throughput and the value Ripple's solutions are creating for its customers. Furthermore, Ripple's extensive engagement in central bank digital currency, CBDC, pilot programs globally is another area where the 1% insight looks beyond the surface. It's not merely about if a central bank is testing a CBDC with Ripple's technology. It's about the nuanced technical contributions, the specific features of the XRP ledger, like its potential for interoperability or its proven settlement capabilities, that are being leveraged, and Ripple's role in policy shaping and advisory for these monetary authorities. This signifies deep institutional trust and strategic future positioning. When Ripple is involved in discussions about the very architecture of future national or cross-border monetary systems, that represents a level of influence and potential long-term integration that is profoundly powerful, even if the immediate, direct impact on XRP's daily volume isn't immediately apparent. This subtle, deeply embedded institutional groundwork, laying the tracks for future financial systems, is an often underestimated, yet incredibly significant, facet of its power. So, you see, understanding these specific, sometimes less visible, and often more nuanced avenues of adoption, the diverse RWA and Sorbonne ecosystem on Stellar, and the deeply integrated, economically impactful ODL corridors and strategic CBDC engagements for Ripple/XRP, this is absolutely key to grasping the true, evolving power and long-term potential of both XLM and XRP. It's about looking where most people aren't, to see what truly matters for fundamental, utility-driven growth. It's quite common, in the discourse surrounding digital assets, to see XLM and XRP pitted directly against each other, often framed as an either/, or proposition, almost as if their respective successes operate in a zero-sum game. This is a narrative that, while perhaps making for compelling headlines, often misses the more intricate realities of the market. However, a more nuanced perspective, one that I believe the top 1% of investors actively cultivate, is to understand their distinct market dynamics, their specialized strengths, and even the potential for what I would term indirect or ecosystem-level competitive synergies. This refined understanding, I propose, is the third crucial secret to unlocking a more sophisticated view of their power. Let's first consider the power of Stellar XLM, as it's increasingly evident in its deliberate cultivation of an open, accessible, and inherently competitive ecosystem for financial applications. When we look at Sorbonne, Stellar's smart contract platform, its success isn't just going to be measured by a single killer dApp. Rather, it will be a function of the sheer variety, the ingenuity, and the user-centric innovation of many dApps built by a truly global and diverse community of developers. Stellar's architecture, particularly with SCP and now Sorbonne utilizing WebAssembly, WASM, which supports common programming languages like Rust and Go, is intentionally designed to lower barriers to entry. This appeals to a very broad developer base. The competitive strength of Stellar, therefore, lies significantly in its role as an enabling platform, a fertile ground where the best ideas can organically emerge and win, especially in areas like decentralized cross-border payments, providing widespread access to digital dollars, primarily via USDC on Stellar, creating novel financial products for previously underserved or unbanked populations, or even in niche applications like community-based microfinance or transparent credentialing systems. The secret insight here, the one that often gets overlooked, is that Stellar's overall power in the market might actually grow because it actively fosters and enables robust competition within its own ecosystem. This internal dynamism, this crucible of innovation where numerous projects are building, iterating, and competing for users, ultimately strengthens the Stellar network itself. It leads to more battle-tested, resilient, and user-validated solutions emerging, making Stellar as a whole a more attractive and powerful platform when compared to more monolithic or centrally directed Layer 1 solutions. It's a power derived from an emergent, collective intelligence. Now, if we turn to XRP and the XRP ledger, its power dynamic, and indeed its competitive positioning, presents a different, though equally strategic picture. It is, less about fostering that broad, permissionless, open-ended competition directly on its ledger in the same vein as a versatile smart contract platform like Stellar with Sorbonne. Instead, Ripple, the company, has very strategically positioned the XRP ledger as a highly specialized and optimized tool for a specific, clearly defined set of regulated use cases. This primarily revolves around institutional cross-border payments, interbank settlements, and increasingly, solutions for central bank digital currencies. The secret to understanding XRP's competitive edge here is often found in appreciating Ripple's significant capabilities in navigating exceedingly complex global regulatory environments. It's about their sustained effort in building direct, high-trust relationships with large financial institutions, central banks, and payment providers. And it's about their focus on delivering enterprise-grade, robust solutions like on-demand liquidity, ODL, that leverage the XRP ledger's specific strengths, such as its long track record of rapid, low-cost, and reliable settlement for high-value transactions. This competition, therefore, is often not directly with open smart contract platforms, but rather with incumbent traditional systems like SWIFT, or with other blockchain solutions specifically tailored for enterprise and institutional finance. The power here is derived from specialization, regulatory acumen, and a deep understanding of the nuanced requirements of the traditional financial world. This is where the 1% perspective becomes particularly interesting, looking at the bigger picture. The overall growth of the digital asset space, a space being pushed forward by these distinct, yet parallel, efforts from both the Stellar and Ripple ecosystems, can genuinely create a larger, more mature market for everyone involved. For instance, significant regulatory clarity achieved by Ripple for XRP in a major jurisdiction, as we've discussed in the past regarding their legal battles, could set important precedents or provide a clearer framework that indirectly benefits the broader digital asset class, including projects and assets on Stellar, by reducing overall regulatory uncertainty in that region. Conversely, innovative financial products or DeFi primitives that are first incubated and proven on an open, permissionless platform like Stellar, perhaps a novel structure for a real-world asset token or a new type of decentralized identity solution, might then inspire and de-risk these concepts for larger institutions. These institutions might subsequently seek enterprise-grade, regulatory-compliant versions of such innovations, potentially leading them to solutions developed by companies like Ripple on the XRP ledger. This creates a sort of innovation pipeline, from grassroots experimentation to institutional adoption. The most insightful investors, therefore, tend to look beyond a simplistic XLM versus XRP narrative. They understand their distinct battlegrounds, their unique value propositions, and critically, how their individual progress, even in seemingly separate domains, contributes to the overall maturation, validation, and expansion of the entire digital finance landscape. It's about recognizing that the rise of digital assets isn't likely to be a winner-take-all scenario, but rather the emergence of a diverse ecosystem of specialized ledgers and platforms, each excelling in its chosen niche and collectively transforming the future of finance. Understanding this complex interplay is a hallmark of a truly sophisticated market view, navigating the future the secret to their long-term resilience and relevance. Looking ahead, the long-term power of any crypto asset is tied to its resilience, adaptability, and continued relevance. The fourth secret that savvy investors look for is evidence of these qualities, often found in how these projects approach governance, ecosystem development, and technological evolution. For Stellar, XLM, its resilience is rooted in the Stellar Development Foundation's SDF, commitment to an open-source ethos and a decentralized network. The ongoing development of Soraban, the focus on creating robust tools for developers, and the efforts to foster a global, diverse community are key. The secret to its future power here is its ability to adapt and evolve through community consensus and transparent development, making it less reliant on a single corporate entity for its core innovation. Its power will grow as its ecosystem becomes more self-sustaining and innovative. For XRP and Ripple, the secret to its long-term resilience is different but equally important. It lies in Ripple's established corporate structure, its deep regulatory engagement, and its clear focus on enterprise solutions. While the XRP ledger is decentralized, Ripple, the company, plays a crucial role in driving its adoption within the traditional financial system. Its power will be sustained by its ability to successfully navigate complex legal and regulatory frameworks globally, its continued innovation in products like Ripple Payments, and its capacity to maintain and grow trust with conservative financial institutions. The long-term relevance of XRP is intrinsically linked to Ripple's success in these areas. Understanding these different pathways to long-term resilience stellars through open-source community and decentralized innovation, and XRPs through Ripple's corporate strategy and deep regulatory engagement is vital for any long-term assessment. This is often an overlooked aspect by those just focused on short-term market movements. Applying the 1% investor mindset to XLM and XRP. So, to bring this all together, the secret that the top 1% of crypto investors understand about XLM and XRP isn't some hidden piece of alpha, but rather a deeper, more nuanced appreciation of their distinct design philosophies, their strategic adoption niches, their unique competitive dynamics, and their different paths to long-term resilience. It's about looking beyond the daily charts and understanding the fundamental drivers of their potential power. For XLM, it's the power of an open, versatile platform for asset issuance and decentralized innovation, particularly with Sorobon. For XRP, it's the power of a specialized, institutionally focused ledger driven by Ripple's strategic enterprise engagements. Recognizing these subtleties allows for a more informed investment strategy. It helps in assessing their true utility, their potential for long-term growth, and their respective roles in the future of finance. The power of XLM and XRP is multifaceted, and I believe these insights are crucial for anyone looking to truly understand their place in the crypto market. This is the kind of analysis we strive to bring you on this channel. It's about going deeper and understanding the fundamentals. I hope this exploration has provided you with a more profound perspective on both Stellar and Ripple. These are complex projects, and the more we understand their core strengths and strategies, the better equipped we are. Thank you for joining me today. If you found this deep dive valuable, I'd appreciate it if you'd give this video a like. Consider subscribing for more content that aims to uncover the crucial insights in the crypto space. And of course, share your thoughts in the comments below. Until next time, stay informed and continue to explore the fundamentals.